All right, so let's talk about something that gets people really heated, but at the end of the day, we need to talk about it. Should you invest in red states or blue states? Now, I've seen investors make a ton of money in red states thanks to lower taxes and fewer rules and regulations, but I've also seen people get completely hosed, ignoring opportunities in so-called blue states. I've invested in both. I've made money in both. So today, I'm gonna break down exactly where I see real opportunity, maybe real risk as well, and share how I approach this so you don't leave any money on the table. Let's get into it. What's going on, guys? Mattia here. Welcome back to the channel where I help you build wealth through commercial real estate. If you're serious about investing, especially over the last few years, the topic of investing in or not in certain states based on their political let's call it affiliation, or which way they lean from a policy and a leadership perspective, has really become front and center. And nowadays, location isn't just about weather or schools or politics. At the end of the day, it's about your bottom line and where your hard-earned dollars are best invested and protected, and where do you see the biggest upside when it comes to taking those risks. Because the state you choose, it can literally make or break your returns with taxes, labor costs, permitting delays, and even your ability to evict a tenant. So today I figure let's just dive into some of the data, the real pros and cons, and at the end, I'm going to share my personal opinion that's helped me find some of my best deals, even in states that you wouldn't expect. First, let's talk about the obvious one. Let's talk about taxes, because this is the easiest quantifiable difference between red states and blue states in a lot of ways. We'll just take California, for example. This is where I'm from. This is where I live. This is ultimately where I got my investing journey, and I still own some assets here. But California, in terms of tax, is, well, it's a bitch. And it has the top income tax rate, which is over 13%. Now, states like Texas and Florida, 0% income tax. So if you're somebody who's a high income earner and you're trying to keep more dollars to be able to invest in real estate, if you're somebody that is pulling in rental income or capital gains, that makes a big difference around how much money you keep at the end of the year. Now, sure, property taxes are higher in states like Texas or Florida. In Texas, I believe it's around 1.6 on average, while California is right around 0.7% thanks to Prop 13. But let's be real here. When you're earning six figures in net rent or flipping properties for big gains, if you're an investor that has a robust business or a robust portfolio in the real estate space, avoiding state income tax can mean tens, if not hundreds of thousands of dollars more in your pocket every single year. And that's money that you can obviously reinvest. You can pay down debt, right? You can go put it to work and arbitrage some upside and capture, some additional returns, or you can just keep it and save it for a rainy day and backstop it in reserves. So on this front, I'm going to say red states get the clear win. Next up, let's talk about labor costs and regulations. When it comes to labor, whether you are doing fix and flips, whether you have a rental portfolio that you're just maintaining, whether you're a developer that is looking to construct and build projects, you have to think about labor costs and regulations being an opportunity and or a risk that you really need to think about and mitigate. Now, in California, our minimum wage is over $15.50, and it keeps what feels like going up every single year. Now, some cities like LA, they're even pushing $30 an hour wages for people that are working in hotels. Now, don't get me wrong, I'm all about people having a fair wage to earn and make a living off of. But at the end of the day, when you think about how this impacts investors and the disincentive that it creates for somebody to want to take risks and say park their money in a Los Angeles hotel versus a Miami, Florida hotel, that's really going to start to get people thinking and looking at the financial modeling a lot closer, which is really going to drive their decisions on where they put that money. I even read about one hotel owner recently who literally stopped a $10 million renovation because the labor model and how it impacted the finances of the deal just didn't make sense to go and take that risk anymore. And therefore, he could have complete stop altogether on the hotel. Now, meanwhile, in Texas and Florida, they stick to the federal minimum or more gradual hikes, which are digestible, reasonable, and ultimately something that investors can work with. But the sticker shock going from $15.50 to doubling it to something like $30 an hour and not having any control or preparation around something like that and how it impacts you, it makes you want to think a little bit closer about where your hard invested dollars are going to be best spent and protected to get the upside that you're looking for. So when you think about it from that perspective, in states like Texas and Florida, you got lower payroll, you have better operating margins. And I want to be fair here, right? Higher wages do mean workers have more money to spend, which can support local economies, blah, 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 blah. But as an owner, your margins are much tighter, and that matters for your ROI. So when it comes to labor and regulation, we're going to give red states the win. Now, like I mentioned in the previous section, regulations, policy. Well, here's where things get really interesting. Building in California, when you think about permitting, you think about the process and the red tape that investors have to go through. I can just attest from my own experiences, it's an absolute nightmare, and it just doesn't need to be that way. Building in California is extremely challenging. Now, I know people that like to build in California because of that exact reason. It is a very challenging climate to develop in, and therefore they believe they actually have more incentive to park their dollars here because they trust in themselves to be able to navigate that landscape. They operate well and they have a track record of success. But anybody that's new that may be looking to navigate this particular state in a development capacity, it becomes very daunting and very risky. You've got environmental reviews, you've got community pushback, we've got CEQA lawsuits, the list goes on and on and on. And it really can take years to get some of your developments or investment opportunities pushed forward. And that's why developers like, for example, a company called Wood Partners announced that they're just done altogether after decades of developing in California, no new projects in this state any further. Now, Texas and Florida, you've got much faster approvals. You've got a much simpler process. Oftentimes, it's not only cheaper to go through that process, but you actually have more support, more appreciation for the development that is happening in these communities, in these regions, in these states. And when time is money, especially in development, you want that predictability. So from that perspective, we're going to go ahead and give red states the win. Next, let's shift over to landlord-tenant rules, because this is a big one, right? You want to have control over your property, and ultimately, while being fair, being ethical, operating with integrity, you still want to have the means and the capacity to make decisions over your property to protect your investment. Well, California has statewide rent control. That's 5% plus CPI max annual increases on what you can increase your annual rent on a property. And we also have just cause evictions. Now, during COVID, eviction moratoriums that ran well into 2023 in places like San Francisco and Oakland. I even had a property where they fought me tooth and nail to leave this woman in the property who didn't pay for many months. And ultimately, we ended up having to pay her to get out. So she got free rent. I had no control over my asset. I was losing not only income on it, but I was carrying additional expenses and costs that the rent would have covered. And I had to pay her to get out of there just to be able to get the property back and ultimately on track. Now, I know landlords who had tenants stay for well over months, well over years without paying a cent. And they couldn't even remove them without paying huge relocation fees or cash for keys like I did. Now, meanwhile, you have states like Texas and Florida where you have no statewide rent control. You have much faster evictions, much more protection for landlords. It's just easier to run a business when you know that these things are in your control versus in the state's control. But keep in mind, right, tenants do get less protection, which can be a social issue. I think being fair, reasonable, and finding some level of balance is important for both sides to create that equilibrium. But that being said, it's all a trade-off. In this scenario, red states get the win. Now, next, we're not going to sugarcoat this. Red states have their own risks too. I'm not here to just, poo-poo on blue states, because there's some great opportunities in blue states. But with red states, specifically ones like Florida, you have sky-high insurance premiums and costs, specifically around hurricanes. And we've seen many more natural disasters in recent years than in previous decades altogether. Now, $11,000 a year on average for homeowners in 2023 in the state of Florida. Now, Texas, remember, they had that big winter freeze back in 2021. They've gotten some major weather over the years as well, with recent floods that were absolutely devastating. The $80 to $130 billion in damages and power failures just for that one winter freeze in 2021 alone. Now, California, yes, we've had bad wildfires. I had to evacuate many of my employees and honestly almost the whole town of South Lake Tahoe back when we had the big fires. And this is something that has continued to be an issue in California. But also, insurers are pulling back from high-risk zones altogether. In Florida, because of hurricanes, in Texas, because of certain issues. You've got California, many pulling out altogether. Now, every state has its own risk when it comes to insurance. And you have to factor in insurance and disaster exposure into your numbers to stress test whether or not you feel comfortable with the likelihood of one of these scenarios playing out, and overall how it impacts your deal, how those costs and those increasing premiums year over year based on where trends are at impact your overall pro forma and your margins. Something to consider. In this scenario, it's a draw. Now, I want to take a second to zoom out on the big picture, which is migration trends. A lot of people have been literally voting with their feet and their pocketbook over the last few years. California, New York, they lost hundreds of thousands of people, of businesses, and ultimately of tax dollars. When you think about the money that didn't come in because of that as well, right? There's some major things to be paying attention to. Now, Florida and Texas, they've been gaining like crazy, with many of the people leaving those states going to red states like Florida and Texas. In 2021 and 2022, Florida grew almost 2%, which was the fastest in the country. And when people go to those areas and we see demographic shifts, guess what? Businesses and investment dollars and tax dollars go along with that as well. Tesla and Oracle were a perfect example, going, hey, in California, we're not appreciated, we're not protected. There's not really many fair laws that ultimately, mitigate many of the risks of operating in some of these radical states with these radical policies. Therefore, we're taking our business to Texas, which is what we saw. Citadel, same thing. They moved to Florida. Now, why? Lower taxes, friendlier regulation, and cheaper living for their employees are just a few of the reasons why you see investments and businesses moving to other red states. And guess what happens to rents and real estate prices when that many people move in? Well, we saw it in the Sun Belt, right? Sun Belt rents jumped over 24% post-COVID when we saw a lot of migration into those states, while coastal blue cities rents only grew 7%, which is a very small fraction of what some of those Sun Belt rents saw. So yeah, demand drives value. In this scenario, red states got the win. Here's one little case study for you to wrap this up. Think about it, what we saw in San Francisco, which was one of the hardest hit cities post-COVID, when we saw many of the landlords who own property in San Francisco experience rent control, eviction freezes, massive oversight and overreach from a policy perspective, telling them what they could and couldn't do with their properties, with their tenants. Things got out of control, and guess what? Many of those people said, we're done, we're out. And we saw the collapse of many values, especially in the office sector, with many businesses pulling out altogether, completely dilapidate many of the values that were in the real estate market across the board. Now, meanwhile, in Texas, right, and Florida, we saw many of those businesses, many of those investors take their dollars elsewhere, and we saw the markets thrive as a result. But I want to be clear, I've also had some major wins in blue states. Me personally, I say I'm market agnostic and I'm asset agnostic. I'm personally more opportunistic, and I'm always looking for an arbitrage on a heavily discounted deal that I believe I can capture the upside on with sound operation and a sound execution of a business plan. So whether that's in a blue state or a red state, my final answer to this is I say you invest in whatever state you believe makes the most sense from where you're getting the opportunity, the team you have in place, the location, the demographic trends, and just go into this eyes wide open, whether you're in a red state or a blue state, on how the policies and some of the negative or positive impacts that we just talked about here in this video can impact your specific scenario. Because here's the truth. Regulation scares off some investors, and that can mean less competition and better deals if you know how to work the system, like that group I talked about in California earlier. So is this just red states good, bad states bad, or blue states bad? The answer is no. It's more like red states are, on average, more business friendly right now. They have lower taxes, they have easier permits, they have the ability for you to do faster evictions and control more of your asset as a landlord. They're riding huge in-migration trends right now. But guess what? Blue states, they have great innovation hubs. They have top universities. They have high incomes that can support rents. Sometimes the best opportunities precisely because other investors are avoiding them altogether and there's less competition. So my answer is it's all about the investor and the skills you bring to the table to meet that unique investment opportunity. Knowing the rules of the state that you're in, pricing in those risks and stress testing your deal, building in, safety nets and reserves and mitigating your risks, stress testing these opportunities and finding those deals where others are scared or others oftentimes miss is where the real gold lies. Overall, as I said, I lean a little bit red when it comes to investing, better risk-adjusted returns, less hassle, but I'm also opportunistic. I don't disqualify deals just because they're in a blue state. Some of my best investments have been in blue states because when others run away, prices drop, and you can negotiate much better, more opportunistic turns. So it's about being smart, know the risks, price them in, and stay flexible enough to make money anywhere. Hopefully this was helpful. I'm curious on your thoughts. Are you a red or a blue state investor? Why? Or both? Drop your comments down below. And as always, thanks for watching.